Well, what's interesting about this is the more it goes up in price, the more the market cap goes up, the more financial institutions need to have it. Its price performance also draws more into it. So we've got a very, very skewed risk reward, which is why it tends to go extremely fast, extremely far. It's the best performing asset class of all time over 10 years, 5 years, 3 years, 2 years, 1 year, or something crazy. I mean, we've never seen an asset like this before. I've never seen anything like the skewed risk reward currently in Bitcoin. It's crazy. There are different narratives because we are living in very fragmented times. So different people are pushing different narratives for different purposes. We've seen the narrative of the stock market where everything looks okay. But the narrative of your friends and my friends who run businesses and restaurants and hairdressing salons, they're not okay. So the average person is not okay. The governments have been kind of claiming it's okay because they don't want to admit it. The central banks have been saying we should be fine, meanwhile printing enormous amounts of money, which tells you that they don't think it's fine. And then others have been talking about the insolvency issues that are outstanding. And then the central banks have also been stopping insolvencies in large companies by buying their corporate credit. So we've got this really weird market where there's no real signals and everybody's lost. Then everybody's fighting over economic restrictions versus non-restrictions over the virus. Everything has become political. I mean, literally every single thing. So there is more noise than there is signal. And I think everybody's struggling with that. I've thought that this will play out in 3 phases that I call the unfolding. The first phase was the liquidation phase that we saw into March. That's the, oh my God, everything's changed, sell everything. Then is the hope phase where people think it's going to be okay, this will go away. And then there's the reality, which I call the insolvency phase, which is what's exactly happening now is that the economy doesn't recover because the virus doesn't go away. The economic impacts are much longer. And the insolvencies, starting from the bottom, from the small businesses, rise through the system. We've seen the banking system in Europe under pressure from that. It recovered in recent days with a bit more hope, but it's been under pressure. We've seen bond yields come lower, and people have realized that this is going to go on longer than people expect. So my view is I don't look at what the stock market's doing, I look at what the bond market's telling us. You know, if you look at bond yields in Europe or bond yields in the US, they're falling and they're expressing concerns about the economy. Bonds tend to tell the truth, while equities tend to tell emotion. I mean, really, this is the time for fiscal stimulus. You have to give. You shouldn't be helping those large corporations with big debts like General Electric. That should not be the job here. The central banks are doing that. We really should be helping the hairdresser and the restaurants and the local cafe and the local small businesses. Yeah, you can't stop retail in the high street because that was going away anyway. But people being penalized for something that is an external event, that's not because they took on too much debt, not because they were speculating, just because as a society we've had to take certain actions. Governments need to do more. The problem is how can they? They're already massively in debt. And we've seen, yes, the central banks have to monetize that debt, but that has its own unintended consequences because we already came into this with enormous debts. Maybe if we were to, let's say, create a globalized currency that everybody could print, let's say, a random number, 50% of GDP all at the same time to fiscally stimulate. And because everybody does it at the same time, then you're not devaluing against each other, you devalue against gold and crypto. There has to be a solution at the end of this. We knew that was coming in 2008. We were really sure it was coming in 2012 when the European crisis hit. Now we're in the big one. That something has to change. I don't believe that the central banks are the key influence in the interest rate markets. So many people believe that they are driving them lower. I think it's driven by debt and demographics. And I think it's inescapable for the United States too. The next phase is obviously monetary stimulus financing fiscal stimulus. The central bank digital currencies allows that to be one whole mechanism directly, so that if I'm the ECB, I can give you money directly because I think you need money and that person needs to have negative interest rates. They can do all of that. That's to come. This feels a lot like the 1930s as well, and equities fell 90%. It makes me really nervous because, again, if we talk about an aging population, if people suddenly think, well, equity markets are the safe haven and they're not, well, that's a catastrophe. There's somebody you can find on Twitter called Plan B. He's an anonymous who actually works for a family office in Holland, and he's a quant. And he analysed a stock to flow model, which means they look at the amount of supply over time of an asset and how it affects price. It's scarcity, essentially. It's the same way that gold works, diamond works, things like that work, rare assets. And it becomes relatively predictable, interesting enough. That predictability would suggest that we might get somewhere like $1 million by 2025, 2026. Then we can use the logarithmic scale and look at the price of Bitcoin on a logarithmic scale. It kind of gives you the same price projections. Then the other way of looking at it is looking at the total amount of above ground supply of gold and its price, and then do the same for Bitcoin, and you get something similar. There's a number of things that suggest that. But at a more sensible level, Bitcoin is currently worth $300 billion in market cap. So that's saying, okay, Bitcoin's worth $1.5 trillion. That's about $15 trillion. Gold's $11 trillion. So it's saying Bitcoin will be the same price as gold. Now, where's gold going to be in 5 years' time? Probably double or triple from here. So Bitcoin's going to be somewhere like 25 to 50% of the market cap of gold at the same time. So all of these things come together to say, it sounds crazy, but they all kind of add up. Supply is restricted, algorithmically restricted, so it can never be changed. So you always know what the supply is. The question is okay, what is the demand? Well, what's interesting about this is the more it goes up in price, the more the market cap goes up, the more financial institutions need to have it. It's also, its price performance also draws more into it. So we've got a very, very skewed risk reward, which is why it tends to go extremely fast, extremely far. It's the best performing asset class of all time over 10 years, 5 years, 3 years, 2 years, 1 year, or something crazy. I mean, we've never seen an asset like this before. We haven't yet got the institutions into this. They're all coming into it. I know they are because I'm speaking to them all. I've never seen anything like the skewed risk reward currently in Bitcoin. It's crazy. The Square Cash app and PayPal, they're pretty much taking all of the mine supply of Bitcoin off the market every day. And then we've got the Grayscale Trust and then everybody else. The only answer is the price to go up. Sorry, but every day when you get an announcement that Fidelity's in the space and this asset manager and that asset manager, and they get the incremental better alpha, it forces everybody else to do it. So as George Soros would refer to them, this is a reflexive loop. It's highly reflective, probably the most reflexive I've ever seen. Everybody has a fear of missing out, or in financial market terms, is short call options on the way up, and everybody's forced to buy on the way up. I think the major systemic shift that everybody fears is not coming yet, which is, a hyperinflationary total collapse of fiat money. That's the extreme version. I do think that something like what the IMF is talking about, a one-off large devaluation, could happen. That's essentially a Bretton Woods format. It's essentially, when the US left Bretton Woods, we've seen these kinds of things agreeable amongst a League of Nations. That's possible. So, if we do that, well, these assets, gold, Bitcoin, will do extremely well. The pace of change of what is happening in the Ethereum ecosystem is extremely fast. Bitcoin, everybody's kind of settled on what it is, and will people develop other applications around it? For sure. Ethereum is like a platform for the future of trust, the exchange of the internet of value. What could that be worth more than Bitcoin in total market cap over time? It could be, I don't think of it as a currency. I kind of think of it as a share of a future platform, while Bitcoin, I think of it as a pristine reserve asset, and I just don't think they're the same thing. Facebook Libra let the cat out of the bag, and it was genius. What they said was, we want to create a basket of digital currencies, including the dollar, altogether. We only think of currencies in terms of each other. The dollar against the euro against the pound. But when all the currencies are in a basket, what's the denominator? Probably money supply. Well, that's an incredibly stable monetary instrument for you and I can promise you that currency, you know it's going to be stable for you. And if you can agree on what that money supply growth is amongst nations, okay, you've got something extremely powerful. It is coming, definitely, without question, and faster than we think. We're not stopping any of the issues. We're still devaluing fiat currency, but what you've created, and you're using, and you may be able to help people get out of this crisis, and it might work for a time. But then the same problem still surfaces. You've now got rid of the problems of the banking system, but the problems at government level and central bank level. That is what Bitcoin is all about. It's the life raft. It's the way that you and I can say, you know what, we're not comfortable with this anymore. I don't want to hold euros or dollars or pounds. We can just step out. I don't know how it all ends, whether we have to have a giant debt jubilee, start all over again, create something different, but something will happen in the end. And I don't think that end is too far away. So it's nice to have something like Bitcoin.